Assalamualaikum and a very good day to our beloved lecturers, Dr. Azilawati and my fellow classmates. Today we are going to present about Islamic finance on topic Buy al-Tawarruq, What and Bank Negara Monetary Notes. Before we start, we are going to introduce ourselves. My name is Fatin Najwa. My other group mates are Wano ATIKAH and FITRAH ATIRAH.
Assalamualaikum, my name is Fatin Najwa and I'm going to present on Buy al-Tawarruq.
Assalamualaikum and hi, my name is Wanur Atika and I'm going to present on my part, which is what.
Assalamualaikum, my name is ATIRAH and today I am going to present about Bank Negara Monetary Notes I, or known as BNMNI.
Without further ado, Buy al-Tawarruq defined as minted silver, or to be more specific, seeking silver money. The term Tawarruq is derived from the word al-warq or al-waraka, which means minted dirham or any silver that issued to serve as a medium of exchange. In this concept, it is designated to someone who has an abundance of silver coins. Technically, it means buying a commodity with a deferred payment and selling it to a person other than the buyer for a lower price with immediate payment, and purchasing a commodity on credit and selling it to a person other than the initial seller for a lower price on cash. These are the difference between Buy al-Tawarruq and Buy al-Inah. Both Tawarruq and Inah are two different developments of Murabaha. Tawarruq is sometimes called commodity Murabaha as it involves having access to cash through the trading of commodity in a real transaction. Tawarruq refers to the purchase and the sale of commodity wherein three different parties are involved: a buyer and a seller in the first leg of the transaction, and a seller, which is the original buyer, and a buyer, which is the third party in the second leg. Tawarruq is permitted by Sharia insofar as it is used as a last resort in pursuit of liquidity. Hence, Sharia does not promote the use of Tawarruq munazam by Islamic banks and financial institutions. This form of Tawarruq reflects the use of the Murabaha contract for pure credit transactions and is politely rebuked by Islamic jurists and scholars. On the other hand, Inah, which is repurchased by the seller, is a replication of a conventional loan, which is interest-based lending and borrowing. Buy al-Inah is the sale of the same commodity between the same two counterparties, which is sell and buy back, at different prices in proportional consideration to the period of credit, which is repayment. In practice, one party buy a commodity, for example copper, iron, and so on, from another on credit by muajjal, and sells it back to the very party on spot for immediate cash, which is a lower amount of cash, with the difference between the cost of financing. For example, Inah interest equals to repayment amount minus the immediate cash. This interest or riba renders this type of sale outspokenly invalid and prohibited, as underlying commodity is fictitiously exchanged between the parties with no intention to possess it by the buyer. Next are the global usage of Tawarruq. Tawarruq was first explored by domestic Islamic banks in the Kingdom of Saudi Arabia and then followed by other banks, most of which were branches and Islamic windows for commercial banks. Banking Tawarruq started with Saudi British Bank in October 2000, followed by Al Jazeera Bank in the late of 2002. Tawarruq has become increasingly popular in Saudi Arabia, United Arab Emirates, and other Gulf Cooperation Council, which is GCC, countries in recent years. The National Commercial Bank, which is NCB, in Saudi Arabia is a pioneer in using TAWARRUQ as a financial product under the branch of Taisir in 2000. Furthermore, the Abu Dhabi Islamic Bank, which is ADIB, launched an innovative new Sharia-compliant financing product called Al-Khair, based on the Islamic concept known as TAWARRUQ, which is approved by Fatwas, Sharia Supervisory Board and Islamic Fiqh Academy. The use of TAWARRUQ in Gulf Cooperation countries, which is GCC, as compared to the use of INA, is much wider due to resolution passed by Accounting and Auditing Organization for Islamic Financing Institutions and Fiqh Academy. The resolution permits TAWARRUQ to be implemented in Islamic banks, but adaptation of TAWARRUQ principle is subjected to tight controls and restrictions. TAWARRUQ transactions are being used by many Islamic banks, for example, United Arab Bank and Bank Muamalat of Malaysia, as a liquidity management instrument and as a mode of financing, especially for personal financing and credit cards. Although some Islamic jurists have strong reservations about the application of TAWARRUQ in Islamic financial system, others were the favorable opinion. In the course of this research, it has been revealed that TAWARRUQ is used by very few Islamic banks around the globe for either personal or corporate financing. For the corporate financing, most banks mainly use it for liquidity management. Generally, commodities such as gold, silver, barley, salt, wheat, and dates aren't allowed in TAWARRUQ. However, London Metal Exchange, which is LME, and Bursa Suq Al Sila, which is BSAS, are being used by many Islamic banks as a platform for TAWARRUQ. Next is the application of TAWARRUQ in Malaysia. Malaysia aims to become a hub of Islamic finance in the world. In line with its vision, the main goal is to provide multiple products that would increase productivity of Islamic financial institutions that would boost the Malaysian economy. Currently, TAWARRUQ, or commonly known as Commodity Murabahah, is being extensively practiced by Malaysian Islamic financial system. It was officially endorsed to be permissible based on the justifications from Sharia, which include the Quran verse says, whereas Allah has permitted trading and forbidden riba usury. Legal maxim that says muamalah is permissible except when there is a provision prohibiting it, and the permission of Hanafi, Hanbali, and Shafi'i school of thought by Sharia Advisory Council by Bank Negara Malaysia on their 51st meeting. Historically, Malaysia was popular in using INA in the financial market transactions. However, it created conflict when majority of scholars' view differed on its permissibility. To overcome this conflict, TAWARRUQ was introduced as replacement of INA. Hence, today the principle of TAWARRUQ has become the underlying principle in many Islamic financial products such as deposit products, financing, asset and liability management, as well as a product to risk management. In this slide, I would explain the TAWARRUQ in Islamic banking sector. In the case of deposit account, TAWARRUQ is applied as to be replaced as Murabahah term deposit account. This replacement was the consequence of Islamic Financial Service Act 2013, which classifies Islamic deposit as principal guaranteed and investment account as non-principal guaranteed. It makes mudarabah deemed unsuitable for deposit account since it its essence, is a non-guaranteed principle. For financing activities, the bank provides liquidity according to customers' needs. The bank provides financing through the mode of commodity trading, and the customer pays in installment or deferment upon the due dates as the result of the credit sale by the bank. The TAWARRUQ concept is not only for cash financing but also is exercised for others financing such as house, auto, and trade financing. Now we are going to talk about Islamic interbank money market. In the case of Islamic Bank Liquidity Management, Malaysia has introduced Islamic Interbank Money Market, which is IMM, as an intermediary for liquidity management and investment purpose based on Tawarruq principle. Similar pattern is applied in the Islamic capital market, which bank acts as an agent for Bank Negara Malaysia during surplus and become a customer of Bank Negara Malaysia during the deficit. Next, we are going to talk about the Bursa Suq Al-Sila. In current years, Tawarruq or commodity murabaha has been translated into Malaysian capital market practice known as Bursa Suq Al-Sila or commodity murabaha house. The practice of Bursa Suq Al-Sila was approved by Sharia Advisory Council in its 78th meeting on 2008. Bursa Suq Al-Sila is initiated to solve the issues pertaining to Sharia violation in organized tawarruq in a manner such as the ownership of the underlying asset, possession, delivery, and agency problem. However, regarding the issue of the underlying asset ownership, Bursa Suq Al-Sila provides a fully electronic system that will recognize and verify ownership through electronic certificates. The contract specifications will also be given to every single asset and will be made known to all parties. Bursa Suq Al-Sila only allows for real commodities which have real value to be transacted, such as crude palm oil. It is also stated in Bank Negara Malaysia Tawarruq parameter under section 13.1. The asset is recognized by Sharia as valuable, identifiable, and deliverable. However, the product still arises among the industry players on the real physical asset, whether it really exists, especially when it involves huge numbers of transactions. To alleviate this concern, Bursa Malaysia has introduced the commodities such as more specification on CPO and intangible assets such as telecommunication and television airtime. Moreover, on the issue related to the possession and delivery of commodity, Bursa Malaysia allows for physical delivery to the buyer. The issue is that additional charge imposed for the delivery and is not included in the selling price in the very beginning. This shows there are two separate prices, which is for delivery and non-delivery. It also seems that there is no intention to result in the delivery from the beginning, where structuring the product, where thereby it makes the sale a fictitious transaction. In conclusion, Islamic financial institutions should strive hard for better alternatives and adhere strictly to the Sharia guidelines and the resolutions by both the OIC Fiqh Academy and Accounting and Auditing Organization for Islamic financial institutions on the application of Tawarruq. Otherwise, Islamic financial institutions will appear as practitioners of merely copying the conventional system. Their functions and operations are essentially not different from the conventional space, except in their use of Islamic terms to disguise the riba and avoid other Sharia prohibitions. Okay, that is all from me, Fatin Najwa. Next, I'm going to let my other group mates explain the others topic.
The next topic is what? Present by me, ATIKAH. The concept of what refers to notification of good or bad news. Although what is commonly used to give notice a good news, whereas what it is to warn the bad one. Technically, what refers to an information leading to a good news in the future. So, according to the Islamic law, the definition of what means promise. It is a promise which connotes an expression of voluntarily of a person or a group of persons on a particular subject matter. The difference between what and contract is that contract is legally binding upon the contractual party once it fulfills all the requirements of the contract needed, while what is an obvious initiation and depends on the acceptance of its applicability. In the traditional concept, what is unilateral in nature and binds on the maker. For your information, what attached to a condition, time, price, conduct, or event that shall be binding on the promiser. For example, Ali makes a promise to sell his car to Emma for only 80,000 ringgit. This promise is unilateral in nature and does not bind Emma to accept the offer. It will be binding upon both parties after a sale contract is concluded. The parties involved in what are promiser, wa'id, and the promisee, maw'ud lahu. The promiser shall be a natural person or a legal entity that must have the legal capacity to execute the subject matter of what. He or she shall express a commitment to perform certain actions in the future to effect what expression of commitment that may be through expression orally, in writing, or by any other method recognized Sharia by the promiser. Next is the subject matter of what. The subject matter of what shall be a commitment to perform specific actions at a specified time in the future. It must be Sharia compliant. What shall not be a providence and exchange of a counter value such as a fee to the promiser. At the inception of what, the promiser and the promisee may agree that the promiser will be granted an extension of time to execute what subject to any agreed conditions. If both parties involved agree for that extension of time to execute what, the promiser shall be bound to fulfill what at the new specified time. We move to the comparison of what, wadan, muwadah, and akad, which is a contract. This is the basic definition in discussing the comparison among the three. What, as mentioned earlier, is a unilateral promise which binds the promiser to do certain acts of promise in the future. For example, promise to buy or promise to purchase. While wadan means two unilateral promises of one party to another party or vice versa, and the two promises are unrelated to each other and the enforcement depends on the two separate conditions. For muwadah, it means bilateral promise between two parties. It can be conditional promise or unconditional promise. As we know, akad, which is a contract, means a declaration of offer and acceptance made at the same time. A contract in Islamic law consists of agreement between two or more parties, and the basic elements are similar to those of the English common law. For what? Generally, traditional jurists have different opinions whether the what is binding or otherwise. However, majority of the jury's opinion that fulfilling a promise is recommended and it is not binding and enforceable in law. Looking at the temporary scholar views, they have reached the consensus that what is enforceable by law until and unless the promisor is not in position to fulfill it in account or any force majeure. If non-fulfillment is due to any willful act of promisor, he has to make good the loss to the promisee. For example of what a promises to sell a house next month to B for 100,000 ringgit Malaysians, but subsequently he sell the house to C before the month elapsed. A will be liable to make up for any loss incurred by B, since B might have made arrangement to lease the house or to sell it or use it for accommodation for B's staff and thus incurred costs. For Wadan, there is no wide discussion on the application of Wadan. However, the application has been used in Islamic structured products by Deutsche Banks. The structured product can be illustrated as per the diagram below. The customer shall give al-wat bi al-bay, promise to sell to the Deutsche Bank to sell the Sharia-compliant deposit security at a certain price, let's say X price. In the event the securities price is higher than the X price. At the same time, Deutsche Bank shall give al-wat bi al-shira, which is promise to purchase, to the customer to purchase the securities at the X price in the event the securities price is lower than the X price. At the transaction day, the following two scenarios will happen. Firstly, if the market price of the securities is higher than the X price, the customer will not be keen to sell the securities at the X price. However, due to the al-wat bi al-bay, which is the promise to sell, by the customer, Deutsche Bank will request the customer honor his promise. Secondly, if the market price of the securities is lower than the X price, the Deutsche Bank will not be keen to purchase the securities at the X price. However, due to the wat bil al-sira, which is the promise to purchase by the customer will request Deutsche Bank to honor its promise. As defined earlier, Al-Muwadah is a bilateral contract whereby a person promises to sell and the other person promises to buy. Jurists are of the view that Al-Muwadah is a law so long as it is not binding to each other. If it is binding, then it does not differ from a contract. The discussion on binding Al-Muwadah was discussed in Majma' al-Fiqh al-Islami for 3 times. Contract, which is the akad as well, are drawn to ensure the existence of clearly recognized guidelines for all parties involved. They are essential elements of a contract. Firstly, offer and acceptance. An offer is a proposal to make a deal, whereas the acceptance is the acknowledgement made by the person to whom the offer is made to and the offer is accepted. Secondly, subject matter. The condition of the subject matter of the contract are the object must be lawful and permissible. It must be in existence and legally owned by the party of the contract. It must be deliverable and known to the parties. Thirdly, consideration. The consideration in the Islamic contract must consist of money, goods, and services. It must be something which is capable of being given and in the case of service should be capable of being performed. Fourthly, capacity of the parties to the contract. The parties entering into a contract must be competent to enter into a contract. And last but not least is that Islamic law does not enforce of illegal activities and which are not permissible under Sharia. There are three benefits of what in Islamic finance. Firstly, parties' commitment. What to show parties' commitment to complete the transaction according to their ultimate intentions. For example, in Murabahah sale to purchase order, the customer will give his undertaking to purchase this asset which he requested the bank to purchase. To ensure the fulfillment of such promise, the bank usually asks for a security deposit or hamish al-jadiyah. If the customer does not fulfill his promise, the bank will cancel the purchase and the deposit will turn as remedy to any loss suffered by the banks. Secondly, as an alternative to put option and call option. In Islamic financing document, the what concept is applied in supplementary document to the master agreement or is commonly known as purchase undertaking. There is also a sale undertaking or call option by the bank, although it is rarely used in Islamic banking transactions. For example, in Al-Ijarah Summa Al-Bay, the customer undertakes to purchase the asset at the end of the Ijarah, which is the leasing term, for an agreed nominal price. Thirdly is risk mitigation. What is a risk mitigation technique in the event of default or total loss? A binding promise becomes necessary to manage and mitigate a bank's risk in the event of customer's default or total loss of the assets. For example, a customer promised to allow the bank to restructure the facility in the event of major defaults. Similarly, the consecutive default in ITAP will entail the repossession and then sale of assets in the public auction. In order to prevent a bank from facing losses, a customer's promise becomes necessary. He will undertake to pay any accidental cost of repossession and also pay the indebtedness if upon deducting the proceeds from the auction, the customer remains indebted. Besides, what is also widely adopted in the Islamic capital market product as a tool for liquidity payments. And next will be the application of what in Islamic banking of products. Firstly, sale contract of Murabahah sale by purchase order. Murabahah is a selling commodity with a defined and agreed profit markup. It is called a banking Murabahah or Murabahah to the purchase order, which is usually offered by the institution in the form of Murabahah credit facility. Secondly is what in Ijarah contract, which is Ijarah Mutahiyah bil Thamid. It is a promise made by the lessor to transfer the ownership in the lease property to the lessee. A lease contract that enables the lessee to benefit from the lease property against a specific rental payment for a specific term and coupled with a promise from the owner to sell the property at the end of the lease period at an agreed price by both parties. Thirdly is what in Shirkah contract, diminishing partnership, which is a Musyarakah Mutanaqisha. The partnership contract in which one of the partners promises to buy the equity share of the other partner gradually until the title to the equity is completely transferred to him or her. This transaction requires a formation of a partnership's contract followed by a gradual transfer of equity share between the partners. So next will be FITRAH for explaining the other topic. Here is the concept of promise from the conventional perspective. The concept of promise from the conventional perspective is as the promise that can be described as an assurance that one will or will not undertake a certain action. It is a type of communication usable in everyday life, either in formal or informal events. Promise can be made through legal documentation or merely as an ordinary conversation. It also should be binding, but the law only enforces certain types of promise, essentially those which involve some form of exchange. A promise in which nothing is given in return is known as a gracious promise. In the conclusions, exercising ijtihad in permitting the application of what contemporary jurists observe is as a necessity for the interest of the contracting parties. What should not be rigidly construed in its limited applications. Instead, what can become an innovative tool in structuring many forward contracts which require flexibility with full commitment of the parties involved without jeopardizing the basic principle and maqasid al-Sharia. It is a unanimously accepted principle that fulfilling a promise is a must for an ethical and religious reason. An absolute promise which is not subjected to a particular reason and neither affect to a loss to the other party is not legally binding. However, the promiser will be labeled as a liar, thus sinful in the eye of Allah. Next will be FITRAH for explaining the other topic.
For introduction, money market has been divided into two, conventional money market and Islamic money market. Islamic banking systems must comply with the Sharia perspective. Liquidity is related in both systems. BNMNI constructs based on murabahah, ijarah by itaman ajal and istismar Islamic principles. Definition of BNMNI is BNMNI is a securities Islamic. It replaces previous Bank Negara negotiable notes BNNN. The instrument was given using the Bay al-Innah theory. The duration of tenors of these issuances is from 1 to 3 years. It may be issued either on a discounted basis or coupon-bearing basis. The purpose of creation BNMI is to increase the efficiency and flexibility of Islamic money market liquidity management. Secondly, to expand investment tools and improving efficiency in the absorption of excess liquidity in the financial system. The issuance and the creation of BNMNI is BNM identify asset, they identify asset and they get certificate of BNM asset, then they sell assets on a tender basis at a discounted from par value through principal dealer, and BNM buy back the certificate of BNM asset at par value to be paid on the maturity date. The parties involved and their responsibilities. Okay, BNM responsible for the sale of BNMNI in the Islamic money market to finance the organization's operations. Principal dealers as part of initiatives to develop primary and secondary public debt securities markets. Instruments offered by other institutions: Commodity Murabahah Deposit I, Islamic Negotiable Instruments INI, which covers two instruments which are Negotiable Islamic Debt Certificate NIDC and Islamic Negotiable Instruments of Deposit INID, and Malaysia Islamic Treasury Bills. The conclusion for BNMNI is Islamic money market products and services are provided in various jurisdictions. The Islamic financial market in instruments may be subject to the conventional principles of securities regulation. Money market instruments are designed to meet the liquidity needs in the short term. The market also offers a price mechanism or structure for trading such instruments by providing all participants with information.